Abubakar, Abubakar, can you hear me? Okay, so before I go to the forex space, you asked about the order block. So look here, watch if you can see my screen. Look here. You asked about order block.
Yes, sir.
Yeah, watch the screen if you can see. You see,
Hello.
price has been dropping from this point to the downside here in this swing. Okay, so you see the last bearish candle before the reversal or the move from the upside happened. That is what we call the order block. So in this case, the order block is in this sense, the order block is here. So you see where the bearish candle, okay, you measure from the whole of that bearish candle. So this is a 4-hour order block. Okay, you measure and then pull it to this side. Are you with me? Can you see? So you see that last red candle that came before the green candle and price started going up. That is what we call order block. So you see, price in the future came back to tap into that zone order block and went up. Have you seen that? Have you seen that? I think your network is not good. Okay, so that is an order block. Not all order blocks.
I'm having issues with my
Yeah, I can see that. But this is an order block.
network. Is not good.
Yeah, this is an order block. Not all order blocks will work out. Okay. So this is an order block. And which one is a fair value gap? Fair value gap, an example of a fair value gap is here. I'm trying to see a perfect example. So three candles on a row. Watch here. Okay. Watch this bullish move to the upside. You see one candle, second candle, third candle. So in a bullish move like this, you want to look for the low of the first candle. Sorry, the high, which is here, which is here. Okay. And the low of the third candle, which is somewhere here. So you have to take into account their wicks, the wicks also, which is here. So if you see a movement like this, okay, and the high of the first candle, the low of the third candle does not cross or overlap, and there is a space. There is a space in between them, like this. That's what we call a fair value gap. Okay, this this space is what we call fair value gap, and often price will drop back to the fair value gap to utilize it and then go up. But what I have seen is that when the fair value gap is, let's say, the fair value gap is above an order block, the order block becomes very strong. Okay. And always fair value gaps are always used for inducement. You can have a fair value gap tapped and price will buy, give a very big move, but it will always be used as inducement. So you see, this fair value gap was later, though price came in and it bought. Later, price drops, took out that fair value gap out and tapped into the order block zone. Boom. Before the bigger move happened. You can see that. Okay, so this is an example of fair value gap order block, bullish order block, bullish fair value gap. You can backtest it, look for them on the chart, and learn how to trade them. If you want to learn how to trade this, you must study smart money concept, SMC. That's not what we are learning. We are just learning price, um, market structure, basic support resistance system. That's what we are learning here, and normal price action. Okay. Um, any question before I move to the forex space?
No, no, no question for now. Sorry, I was having issues with my next one.
It's fine. It's fine. So somebody asked about the updates on the step 500. This is what is happening. Okay. The step 500 is failing to go above this level as we analyzed in the first session. And yeah, so if it stays like this, it's likely it will drop. And I don't have the money right now to enter the trade again, so I'll just be watching. Okay, let's go real quick to let's go real quick to the okay. So let's start with the dollar index, right? So let's start with the dollar index. Um, let's go to 4 hour on the dollar index because the dollar index is what determines what majority of the forex market will do. So from last week, we saw that the dollar index Friday ended by nullifying or invalidating this simple head and a shoulder formation pattern that we were seeing here. Okay. Um, so we're seeing a head and a shoulder, a bearish head and a shoulder here, looking for the cells to continue. A high, low, higher high, lower high, right shoulder form, then price hit to break the trend line. It couldn't. So if I'm going to use this pattern like this, if I draw my trend line like this, okay, we needed price to break this trend line and take out this bullish candle here. I mark this zone for a break of structure, then the market will be selling. Okay, so it tried doing so, it never succeeded, and then it's reversed up. Currently, as we see it, the head is crashed. So if your head is crashed, what can you do? I'm asking the question. Miss Uchena, if your head is crashed, what can you do?
Nothing.
Nothing here. So it looks like the bearish head and the shoulder is getting invalidated. But okay, what if your head is crashed and God gives you a new head? You come back to life, right?
Yes, sir.
So the only thing that will save this trade is for this area to form a new head. And sometimes in head and shoulder patterns, we can get two double heads. And that's what we call double top. Or we can get a double top, which means we get another head here. Or it could just make us a new head. That means God is giving us a new head. Okay? So that if that is going to be a new head, then our left shoulder will now change from here to here. The old head is going to become a left shoulder. So we can have something like left shoulder, a new head, maybe somewhere here. Price should drop down to crash this area here, and it should form a right shoulder in order to complete the head and the shoulder and sell. So we might have to wait for this to happen. Okay. If this does not happen, if God does not give this pair a new head, the sky is the limit. It's going to reach out to the next important zone, which is this area. Because this area is like a supply. Okay, we see a bearish fair value gap. 1, 2, 3 candles. What did we say about them? The low of the first candle, the high of the third candle. This space here, as we see, is a fair value gap. So price might want to push up into it or utilize this area of imbalance, maybe push more up into this area and then before it drops. So if we don't get a new head around here, then it's going to continue pushing up into the imbalance. That at least that would be the first target for this buy. Okay, but we had a reaction here. Can you all see here? What happened here? Sellers were here and they pushed price down. So those sellers have to be comfortably taken out for the buy to be free to happen. So that's why I said we can either get a new head here. Price could break these sellers, all right, but what if it drops back to stay below the sellers? Okay, so that possibility can also happen. It can break them, all right, but what if it drops back to stay below the sellers? Okay, so if that happens, if it breaks, if it breaks these sellers and it still drops back to stay below them, okay, then we are entirely having a new head and we will need a new right shoulder for the sell. So the way it is right now, it is looking bullish. And that's the way we should take it. And if it breaks up, it's going to target this area of imbalance, liquidity. Okay? Supply. People are calling to sell more from here. So this is the first thing we will look at. Okay? Now, the other thing is if we look at from this low point here, we measure to the high, double top here, price dropped 61.8%. And it's pushed up is above 50%. From the little experience I have in using the fib to measure ranges, from 61.8 and is above 50%, there is nothing stopping it from reaching 38 or 23. There is nothing stopping it. So the only place it can get to is 38, 61, 38, and then drop back from 38, it drops back to 78 here. Or 61, 38, 23 here. Okay? 61, 38, 23. So these are the two options. From here, it should drop back to 78 and go down. So that's one insight I can share with all of you. Okay. Let's go to the weekly time frame. Weekly time frame on the dollar index. From last week, we analyzed that this pair is bearish. From this high to this low, we took out this previous low here. Therefore, it's bearish. And we have price from this high, taking this low, moving up, taking the next low. So bearish. This bullish structure to the upside looks like it's a retracement. And the retracement went deep into premium, 78.6%. So it makes sense for us to expect price to drop from premium back to discount. Anything below 50%, either 50% or below. 50% and below. It makes sense for us to think like that. Okay, so this is something that I like all of you to look at. So we are inside premium from the way things look, and the general trend looks like it is bearish. Okay, now inside the premium, we had a bullish structure before price got to the premium. What was that bullish structure? Higher high, lower high, higher highs, lower highs, failure swing, another lower high, higher high. Okay. Fail to swing, lower high. Okay, lower high, we should expect a new higher high, but we got a failure swing and then a break of structure. Okay, so we have some kind of internal break of structure now, bearish break of structure, which means this bullish move looks like it is trying to change. But for it to fully change, we will need price to take out the last external low that gave the high, which means the current range we are trading within is from this low here to this high. So we need to use our fib to measure this low to this high and monitor how price is performing within the levels on the fib. Okay. And if we do that, we can perfectly see that price first made a retracement to 50% level, which is here. And then it moved up back to 23. It fails to give a new high. From here, it pushed down to break the 50% zone. And then it's currently on 61.8. Okay, so at 61.8, two things can happen. Price drops to 61.8. Two things can happen. It's either price will stay above the 61.8 and push up to 50 again or 38, which is here. $61, 38. Then from 38, it will drop to 78. Okay, you see that move like a flag. Okay, it might come here, push up, drop, do all the things it wants to do, stay below 61.8%, and like a flag, boom, drop down. It can behave like this. It can go like this. Or at 61.8%, we see it hit 61.8% first, then it did a light retracement to 50%, which is here. This is an imbalance here. It did a retracement to 50% here. Okay. So, and then it came back to 61.8% here. It could just retest the 61.8% again, the line, exact line here. You could just retest here and drop back to 78. Yeah. Before it can make any move again to the upside. Okay. So these are two possibilities. But if you watch it carefully, price needs to be able to stay above the 61.8% line. You see this black line here? Do you see this black line here? That is the 61.8% line. Price must stay above it in order to push up. If it stays below it and it stays below it, then it will drop. So with these are the two options I see. So with this in mind, let's look at the weekly time frame. We get three bearish weekly candles closing on a row, and the market is looking bullish right now. So what do we think is likely to happen? Let's watch for any imbalance in this move. These three candles closing in a row means that the sellers are really in charge or they mean business. We have the low of this first candle, and the high of this candle also appears to be somewhere a little bit. It appears to be somewhere here, somewhere here, somewhere here. Watch carefully. There is a little bit of space in between them. And because this is a weekly time frame, that space is going to look very significant on 1 hour, 4 hour, 30 minutes. Okay? So I am thinking that this week the market might want to push up to clear the high of this previous week candle, clear the high, and tap into this imbalance or fair value gap. And then if it does that and is able to stay below, it will drop. If it taps into it and drops to stay below, it will drop. But if it taps, comes below and still go and stay above the 61.8 line, the imbalance, the sky is the limit. It will be going up. If price is going up on the dollar index, Euro USD will keep dropping massive. GBP USD will keep dropping massive. So understanding the DXY means that we have analyzed GBP USD and Euro USD. And these are the pairs we want to be looking at for our $10 project this week. Okay. So my expectation or prediction on the weekly time frame is to see price trade back up into this fair value gap or take the high of the previous week candle so that price will drop. That is at least what I am expecting. I am not expecting it to buy big, to stay above and buy. For now, I'm not expecting that. So with this in mind, let's go to the daily time frame and let's look at how things are going. So you can see the two lines that I put here. If you can see them, these are the two lines. They are here. Okay. The two lines are all here. The weekly time frame imbalance is here. Okay. So let's watch. Let's go to 4 hour. We still see them. So it looks like the shaded zone that we are expecting price to get to. That's exactly the same area that the weekly time frame imbalances. It looks like it's the same area. which is good. Let's go to 1 hour. Okay, it's still the same area. Okay, so if I am to measure the range again, like I did before, from this low to the highs, price is hitting 61.8%, it stays above 50. Price has no, there is nothing preventing it to going to 38 or reaching out to 23 here. If it drops, it pushes up to here, it means it is utilizing a higher time frame or weekly time frame imbalance. Are we good? So if the expectation is for the DXY to be buying, at least for now, until things change, things can change, but for now, then let's go to Euro USD. Then Euro USD has last week candle, it looks like a rejection pointing down. So we have a bullish candle, a rejection candle. This week should be bearish. If this week becomes bearish, then we will have a morning star. A morning star at this level means that price will want to keep dropping more, at least. Okay, so let's see how this week is going to be. Let's look at and weekly time frame. Does this area sound like an imbalance? The high of this candle and the low of this candle. It looks like there is a small imbalance here. I don't know if price will want to push into it, but if for nothing at all, at least the body of this candle here should be retested. Okay, so if that is going to happen, then it means the dollar index will be buying for this to happen. Okay, so let's say price is just trying to retest the body of this candle, this big candle, drop to retest the body or the small imbalance here. Okay, so let's just see here. Take here, for instance, here. Okay, for instance.
So
But
a question.
yeah, question ask. I'll put a line.
Yes, I just wish to find out for the fair value gap. Is the gap stronger when it is smaller or it is bigger?
As long as it's a fair value gap,
Okay.
price can come back to it and utilize it. It doesn't matter whether it's small or big. Okay, as long as it is a fair value gap. But not all fair value gaps will be utilized. Price does not return to all fair value gaps. So to know how to trade fair value gaps, we must spend time to learn it and understand how fair value gaps work or do not work. Do you understand my point?
Yes, sir.
Yeah. So
So it
that's
means that there are two methods of
Mhm.
trading. You can use smart money concept or supply and demand zone. So those are two
So there are
different
not two
methods.
methods. There are a lot of strategies. I'm only
Okay.
saying that the fair value gap and other block concepts are part of the smart money concept, the
Okay.
SMC. Okay, I used to trade that. I mastered trading smart money, and I still even use most of those ideas and concepts in combination with what we are trading now, which is trying to make the market simple by using.
Okay, yeah, that is what I wanted to ask. That can one use them in combination with the
Yes,
supply and demand zone?
yes, because the step 500 trade that I was taking, I was seeing that this area was a 4-hour fair value gap. Okay, where the market reversed because I was in like $40 profit. You all saw the screenshot. This was a 4-hour fair value gap. Let me show you the 4-hour time frame quickly. See, okay, so there was this the low of the red candle and then the high of this green candle. This space here is what we call the fair value gap. The three candles on a row, all of them do not need to be green, bullish. Two can be bullish and one can be bearish. But as long as the low of the third candle and the high of the first candle does not cross and there is a space, that space is what we call fair value gap. So this 4-hour candle dropped into the fair value gap and then pushed up. I was expecting to take profit below the body of the candle. I wanted to see price crash the body. Back, you see, there is another fair value gap down here. One candle, second candle, third candle. So the low here and then the high of this one is also another fair value gap on the 4-hour. So I was expecting that the market will rather drop more to crash this low into and make a wick into the fair value gap below here before rejecting. By the time I realized, it just utilized this one and never came down and went up to take out my entry, and I lost all the $40 and closed on his stop loss, closed on a loss. At the same time that this is a fair value gap price utilized here, on the bearish side, look at this candle, 1, 2, 3, the red candles. The low of the doji candle and the high of the last bearish candle, there is a space here. This space is also called fair value gap. So this is a bearish fair value gap. Okay, so we can see that price is buying all right, utilizing a bullish fair value gap all right, but everything happening right now is still reacting within a bearish fair value gap. Okay, so which one is going to win? That is the question. So though a fair value gap has been utilized and price rejected and went up, is it going to continue buying? That's the question. Okay, or is the bearish fair value gap going to be more stronger and cause price to drop back to sweep this area and drop more into the fair value gap below here? So this fair value gap should guide you into areas where you should be taking profit because they work a lot. Always, most times, the market will be, there will be reactions or the market will want to respect those fair value gaps. But like I said, not all the fair value gaps will be utilized. Okay, but they can give you a lot of good information about where to take your profit, where to close your trades, or where to even take your entries from. So the reason why this sell setup was aligning with our strategy, the PSR and the other things, was also that it is a bearish fair value gap. So according to smart money concept, so let's say one of the requirements I learned when I was learning the smart money concept is this impulsive move should break structure. So you can see this bearish move that created an imbalance of fair value gap took a previous low out and also took this previous low. So that's a break of structure. So if the move breaks structure and it leaves an imbalance, then there is a high probability for the imbalance to stand strong, which means when price returns back into that area, it should sell, and the goal should be for price to make a new lower low. Okay, so for this trade to be successful, price must make a new lower low, must take this low out. Once that is done, the trade has been successful. If this is your entry, it must make a new lower low. This is what will make the trade or the setup successful. If you get the sell up to somewhere here, the trade, though you have been in profit, but the trade is not successful like that because it doesn't break a previous low or doesn't break structure again. Do you understand the point? So some of the requirements for why a fair value gap should stand out or should be strong is present. There is a break of structure and there is an impulsive push to the downside that breaks structure. Price retraces back into that imbalance. It should sell now. Okay, it should sell. Now, those of you who will be looking for the order block, you see first price hit the fair value gap. You see the first red candle. It dropped down. This second candle that closes on green, it came down and rejected up to close on green. So it's what this means is that the fair value gap was first utilized, then it brought the price down, but it wasn't enough. Then the market now went up, okay? But when it went up, it tapped into the area above here. What can you say about this area? This area looks like it is an order block. The last bullish candle before price started reversing. I was explaining to Abubakar about it. Is that not the small green candle there? Is that not the small green candle there?
Only the body or with the wick.
The body, you can add the wick. It should take all the wick of that green candle. Okay. The last green candle or bullish candle before the market started reversing and reversed. That is what we call the order block. Price taps into the fair value gap, was dropping, rejected, went for the order block zone, and is now trying to drop. If this drop becomes successful, it means that the market targeted the order block. And this means that an order block that has a fair value gap that breaks structure is a strong order block. Let me say it again. Any order block that breaks structure and that leaves a fair value gap, that order block is likely going to be stronger. But that will be only when this trade becomes successful. If this trade doesn't become successful, it means we cannot justify what I said. So this is the way I learn. If I'm seeing this, I'll be, even if I don't take the trade again, because my balance is left with only $10. So for me to take the trade, I have to be very careful that the entry I'm taking, the thing will not even go against me 2, 3, 4, 5 ticks. Because this pair, if it goes against you 3, 4, 5 ticks, you are like $15 loss already. So if I want to take it again, I have to be very careful of the entry I take. Otherwise, I'll lose all the accounts. So I'll rather leave it and use it to trade Euro USD. Okay. But if the trade ends up being successful, it means that any other block that has a fair value gap that breaks structure, that other block can be very strong. Is that okay? Did that make sense?
Yes. Yes, sir.
Okay, good. So I think um we have the expectation for the week already. So we'll be expecting the Euro USD to drop more, whilst we expect the dollar index to go up
Increase.
for now. Okay,
Mhm.
for now. Until if things change, we will update the setup. Okay, we will update. I think the market open, right? Did the market open already? Has it opened?
It opens at what time? That's what I wanted to, if we can
Check your
summarize.
MT5. If you check your MT5 and it's moving, it means it's okay. I'm not sure it's open yet.